Looking back, we've been hit by hard times and seasons, yet we survived. It's been a year being stuck in the crypto winter, and many other factors have given investors reasons to sell their coins and leave. However, some stayed, waiting patiently for recovery. Is it time to amass gains? Or do we need to wait a little bit more? In 2022, it was not surprising that various industry experts and key players were talking about a crypto bear market. After all, Bitcoin was trading at over half its all-time high, and various smaller altcoins fell even further. Plus, there were over 6 months of falling prices and sideways price action. Some industry experts announced that the crypto bear market, and this included the founder of Cardano, Charles Hoskinson, who tweeted about the crypto's price action, noting that even miraculous happenings won't improve the market right now. Yes, it's called a bear market. That's what happens. Nothing changes it. No announcement makes a difference, he said. Charles Hoskinson, who has carved a reputation for straight talk on social media, went ahead to say that Cardano could cure cancer or create a personal poker-playing robot that drives a grandma to church, and the price of ADA would still fall. It's impressive to know that Hoskinson has no sentiments attached when it comes to talking about Cardano and its native token, ADA. But isn't it scary that he didn't talk about ADA from an optimistic perspective during the onset of the crypto market? Normally, the many crypto investors who have seen their portfolios decimated want to know when the pain will end. It's been a year already, and the trouble is that nobody has a crystal ball, and we don't even know when the factors that are driving the prices down will change. Plus, in 2022, the world was dealing with the aftermath of a global pandemic, which had lingered relatively to this current moment. And while there are patterns and metrics, and we can make some guesses based on past performance, much of what is happening right now is unprecedented. At the beginning of the bear market, a well-known crypto investor and guru, Raoul Pal, told Cointelegraph that the bear market won't end until the Federal Reserve eases up on its economic tightening measures. The Fed was raising interest rates in an effort to curb inflation, which is one of the big drivers for the current crypto price devastation. It was one of the factors that fueled the crypto disaster, and not only did it spark fears of a recession, there was a lot less money available for riskier assets like crypto. Cryptocurrencies are high-risk investments, and there's no sugarcoating the fact that some will not survive long-term. The high risk are the trade-off for high potential returns of putting money into a relatively new technology. And for long-term investors, there's a good chance that the rewards from successful projects could eventually make up for any losses from failed cryptos. Undeniably, Cardano is one of the most robust blockchain networks in the cryptocurrency business. After all, it is the tried and tested crypto. Charles Hoskinson, as we mentioned the founder, has described ADA as a solid futuristic technology with a programming staff that prioritizes thoroughness over speed. He even commented on a poll undertaken by @LondonRealTV, the Twitter account of the same name media firm on Twitter. Even in bad conditions of the market, a report showed that nearly 80% of respondents chose Cardano's native token ADA above other major cryptocurrencies. Surprisingly, the crypto appeared to be more popular than Bitcoin, Ethereum, or any other cryptocurrency. In the poll, ADA scored 78%, while Bitcoin and Ethereum earned 11% and 5% respectively. On June 3rd of 2022, the token dominated the market as the largest gainer among the top 100 cryptocurrencies by market value, having increased by more than 13%. Its reallocation rate was higher than that of other chains, both in proportion and momentum. For the Cardano whales, they were moving enormous amounts of ADA just prior to the substantial price increase. This was around the time that ADA development team was working on the Vassal hard fork, which was intended to streamline Cardano's support for smart contracts. Unfortunately, this same famous cryptocurrency made it into the list of worst performing assets in the market, especially when it came to profitability. The ability to make a profit from a digital asset is what drives the majority of investments when putting money in the asset. But for some, this has not been the case, given that their assets have been performing badly in the market. Cardano is one of those that have put the majority of its investors in the red after consistent dips. We are not proud of this reputation, but it's one of the things that we must battle with. But moving forward, data shows that Cardano investors are having some of the worst luck in the space. The digital asset, which had hit a peak of $3 in the previous years, has found a hard time sustaining its value. It has since then crumbled back to $1 numerous times, touching yearly lows. In turn, this has caused investors to watch the value of their investments plunge, putting the majority of holders in the lost territory. While the entire market has had a bad run following the bull rallies of the 2021 year, Cardano seems to have taken the hit harder than any other digital asset. The records have never been smooth. Nonetheless, Cardano has already survived one bear market after 2017 and is still a relevant project in the top 10. This is one of the potential signs to not give up on Cardano. Interestingly, Cardano is navigating through the current bearish market climate somewhat mirroring the path of Ethereum charted in the 2020 bear cycle. This observation could mark a positive turn for the ADA token if history decides to repeat itself and dance to our tune. Throughout the previous bear market, Bitcoin's dominance increased from approximately 35% to a whopping 73%, significantly as a result of the market's flight to perceived safety of the crypto heavyweight. In the last few months, the dominance of Bitcoin has only risen from about 39% to 49%, revealing a different pattern this time. This seems to indicate a shift in the crypto landscape, inching towards a multi-chain future where several blockchains coexist and thrive simultaneously. It's true that Ethereum's dominance has impressively remained at 20% this bear market, and there's certainly a story there. So congrats to them. ADA is doing just what Ethereum did to last bear market before truly establishing itself in 2021-2022, and is still well above the 2020 lows. Amid this shift, Ethereum's share of the total market cap impressively retained its position at around 20%, even throughout the bearish market cycle. As Ethereum solidified its standing during the 2020 bear market, Cardano's current performance seems to follow a similar path. The ADA token has managed to stay well above the 2020 lows, demonstrating resilience in the face of an overall bearish market. This is similar to what Ethereum did during the 2020 bear market before its impressive run in 2021 through 2022. However, it is worth noting that Cardano's path is not necessarily a guarantee of success, but a sign of the potential for ADA. Ethereum had to navigate through a series of trials and tempests before it could solidify its position on the market. Cardano will need to confront its peculiar challenges as well as deliver on its promises to reach the same level. It will likely face twice as many storms as Ethereum encountered. Even as Cardano ADA holders are not holding up, evidence of Cardano's thriving DeFi sector is reflected in the growth of its top 10 protocols. According to DeFi Llama data, these protocols recorded double-digit growth over the past month. While there might be several reasons for traders to sell at lower prices, the SEC's decision to label ADA as a security in June might have influenced some traders' thoughts. Although the Cardano Foundation has disputed this classification, it's clear that the labeling impacted market sentiment surrounding the asset. It shook a lot of things that were holding steady in the Cardano ecosystem. Until mid-April, Cardano was largely keeping pace with Bitcoin and was up 80% for the year, but then came a turbulent June. When the SEC filed its lawsuits against the cryptocurrency exchanges Coinbase Global and Binance, it included a reference to Cardano as one of the quote-unquote unregistered securities that these exchanges were offering to customers. Almost immediately, the market panicked and a rapid sell-off commenced, without sparing Cardano ADA. Regardless of these troubles, the long-term growth catalyst for Cardano still involves decentralized finance, or DeFi for short, one of the most important sectors of the blockchain world. Heading into 2023, DeFi was one of the priorities for Cardano, and there have been a lot to get excited about this year. There's been a significant bump in key DeFi metrics, as well as the launch of new products to the Cardano DeFi ecosystem. All of this would suggest that Cardano has plenty of upside potential ahead. When we decide to zoom out to a 30,000-foot view of Bitcoin, the picture is even more attractive. Why can't we do the same for Cardano ADA? Zooming out. Bitcoin is becoming an increasingly important part of the global financial system, and as such, its value will continue to grow beyond just payments. Cardano can make its mark too, so can we become a little bit more confident about Cardano ADA's survival? But that's going to do for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.